Welcome to our deep dive into, well, the future. We're going to be looking at investment trends for 2025 and beyond, specifically in Asia.
We're using HSBC's report, A Compass for the Future, to guide us. It's full of interesting insights about the investment landscape.
So get ready to level up your investment knowledge with us.
That's right, we'll be unpacking the most important takeaways for you today. So let's jump right in. HSBC is talking a lot about a shifting global landscape, with Asia rising as a major player.
Yeah, that's definitely been a topic of conversation lately. What are some of the key things they're highlighting?
Well, they're predicting really robust economic growth for Asia in 2025. They see domestic strength, particularly in India, and also the ASEAN, the Association of Southeast Asian Nations.
Oh, right, of course.
Plus, they think China's policy stimulus will play a big part too.
Interesting. I'm curious, though, with all the talk about U.S.-China trade tensions, is HSBC kind of downplaying that risk?
Not exactly. They do acknowledge the concerns around tariffs, especially for investors. But they think the impact on Asian earnings might not be as bad as some people initially feared.
Okay, so a little less doom and gloom than some headlines might suggest?
Yeah, I think so.
Why is HSBC so confident about Asia's resilience then?
Well, you can't ignore the demographics. Asia is home to a massive 59% of the world's population.
Wow, that's a huge market.
And India, especially, has a young and growing population.
Right.
HSBC projects, they'll continue to see growth all the way to 2060.
That's incredible. Okay, but what about beyond just population growth?
It's not just about the numbers. Asia is also becoming seriously competitive in various sectors. They're really making their mark in areas like semiconductors and electric vehicles. They're becoming major players on the global stage.
It's true you see that everywhere. But those tariffs are still a concern, right?
Oh, for sure.
How are Asian companies navigating that whole challenge?
Well, a lot of companies have been strategically diversifying their supply chains. They're moving away from relying solely on China to minimize their risk from those tariffs. Plus, China's dependence on U.S. trade has actually decreased, which makes them a bit less susceptible to those trade shocks.
So it's all about adaptation and finding new avenues for growth, it seems.
Exactly.
But let's get down to brass tacks here. What does this all mean for investors like me, an average person? Where should we be looking for opportunities?
Well, the report specifically points to the potential of Asian companies that focus on their domestic markets or those with strong trade relationships within the region.
So rather than betting on companies that are heavily reliant on exports to the U.S., the smart money is looking inward at Asia's own growth engine.
Yeah, that's a good way to put it. It's about diversifying your portfolio and getting on board with the growth trajectory of this really dynamic region.
Okay, I like it. Now, HSBC gets even more specific and identifies four major investment themes within this overall trend of Asia's rise. The first one they talk about is Asia's domestic leaders. What's the thinking behind that?
Well, it goes back to that robust domestic demand we were just talking about. This theme focuses on companies that stand to benefit from that growth within Asia itself. So think of companies that aren't banking on exports to the U.S.
Right.
They're catering to the rising spending power of consumers in Asia.
Okay, so riding that internal growth wave, what sort of sectors are we talking about here?
HSBC specifically points to consumer goods, internet companies, and even some travel plays as areas to watch. As those Asian economies grow, people have more disposable income and they spend more, leading to growth in those sectors.
It's like finding those hidden gems that are thriving on Asia's own momentum, not just global trends. Love it. Now, theme number two is power up Asian shareholder returns, which, I mean, who doesn't love a good return, right? That's the story there.
Yeah, this one's pretty interesting. It really emphasizes companies that are focused on increasing shareholder returns. And they do that through things like high dividends and share buybacks.
So basically, companies that are committed to giving back to their investors. Why is Asia particularly good for this approach, though?
Well, first of all, certain markets in Asia offer some really attractive dividend yields. Think Singapore, Indonesia, Hong Kong, Malaysia. Their yields are looking much better than the global average.
Oh, wow, that's significant. But what's driving those higher yields? Is it specific sectors or government policies or what?
That's where the research comes in, right? You really need to understand the why behind those attractive yields to find the real opportunities.
So not just chasing yields, but figuring out if they're sustainable based on the underlying factors.
That's a great point. Now, you mentioned share buybacks, too. Are those also increasing in Asia?
Definitely. We're seeing an uptick in share buybacks in markets like Japan, mainland China, and Hong Kong, it's another sign that companies are actively looking for ways to return value to their shareholders. So for investors who want a more stable source of returns, this whole Power Up Asian Shareholder Returns theme is worth a look.
Absolutely. It's about finding those companies that are prioritizing shareholder value in a region that's poised for serious growth.
Makes sense. Okay, next up we have Rise of India and ASEAN. I mean, this one feels like a no-brainer considering their economies are booming, right?
It's definitely hard to ignore. This theme is about capitalizing on the long-term growth potential of those
That
regions.
makes sense.
They've got favorable demographics, a rapidly expanding middle class, and of course, technology is advancing at an incredible pace there.
And HSBC has some pretty impressive GDP growth forecasts for both India and ASEAN too, right? What are we talking about numbers-wise?
They're projecting growth rates that are way above the global average. It shows just how dynamic and how much potential these economies have.
So it's not just riding the current wave, it's about positioning yourself for continued growth over the long term. Are there specific sectors within India and ASEAN that HSBC is particularly bullish on?
Oh, yeah, definitely. They're pointing to sectors like financials, consumer discretionary, industrials, infrastructure, and communication services.
So companies involved in building the foundations of those economies, like infrastructure, or those catering to that growing consumer base.
Exactly.
Okay, last but not least, we have high-quality Asian credit. Now, bonds don't always get the same hype as stocks, but HSBC seems to think they have a place in a 2025 portfolio. What's their take on that?
Absolutely. Especially in a region with such a positive economic outlook, high-quality bonds in Asia can offer some pretty attractive yields and can be a really good way to diversify your portfolio.
Right, it's like a stability play within a growth-oriented region. Tell me more.
Well, HSBC suggests looking at a few different options. There are Asian USD investment-grade corporate bonds.
Okay.
They also mention Asian financials and even local currency bonds in places like India and Indonesia. They even highlight select Macau gaming bonds as a potential opportunity.
Wow, that's interesting. So it's not just sticking to government bonds, it's about considering a broader range of options within the Asian credit market.
Yeah, and it's really crucial to understand the specific risks and opportunities associated with each type of bond, right?
Of course, yeah.
For example, local currency bonds might have higher yields, but you've got to consider the currency risk as well.
Right, right. Factor that into your investment decisions.
Exactly.
Okay, we've covered a lot of ground in this first part of our deep dive. We've explored the whole changing global landscape, Asia's resilience in the face of those trade tensions, and even dove into these 4 specific investment themes focused on Asia's growth. It's clear that Asia offers a lot of potential for investors who are paying attention.
Oh, definitely. It's a region to watch, for sure.
Mm.
And while there are always risks to consider, understanding the economic and geopolitical dynamics at play can help you make smarter investment decisions.
For sure. All right, up next, we'll shift gears and dive into the world of disruptive technologies. Get ready for some serious, mind-bending insights.
Yeah, we're going to explore how AI, automation, and other groundbreaking technologies are creating both incredible opportunities and some serious challenges for investors, so buckle up.
Welcome back. So we just explored the rise of Asia as a global economic powerhouse, and now we're shifting gears to dive into the world of disruptive technologies. Get ready for some serious, mind-bending insights.
Buckle up. HSBC's report really dives deep into how advancements in things like AI and automation are shaking things up and creating a ton of opportunities, but also some big challenges for investors.
Okay, color me intrigued. Where do we even begin to unpack all of that?
Well, let's start with a concept that's both fascinating and kind of unsettling. It's the butterfly effect. You know, that idea that a butterfly flapping its wings in Brazil can cause a tornado in Texas.
Right, the whole idea that a tiny, seemingly insignificant event can trigger these massive, unpredictable outcomes. But how does that relate to disruptive technologies and, well, investing?
Think of it this way. There was a seemingly simple observation, diabetics taking this new class of medications, GLP-1 agonists, I think they're called, and they experienced lower BMIs as a side effect.
Right, I remember reading about that.
Well, that led to a huge shift in the whole obesity treatment market.
Oh, right, the medications ended up reducing patients' appetites.
Exactly. And suddenly, boom, a whole new application for the drug emerges, and this massive new market is born.
So, okay, I see the analogy. But how do we apply that same thinking to AI.
Well, think about it. The basic technology behind AI has been around for a while now, but then these advanced software programs emerged, like large language models or LLMs.
Oh yeah, LLMs, those are what power things like ChatGPT, right? They seem to be everywhere these days.
They are, and for good reason. LLMs have basically unlocked this whole new world of possibilities for how we can use AI.
Yeah, it seems like every day there's a new AI tool or application that comes out. It's kind of hard to keep up.
It really is. We're talking about everything from chatbots and advanced search engines to tools that can create presentations, analyze data, and even write code.
It's pretty incredible how quickly AI is evolving.
Yeah.
But as investors, how do we even begin to make sense of it all? It's easy to get lost in the hype. Where do we find those real opportunities?
Well, that's where the HSBC report is really helpful. They've broken it down into 4 key investment themes within the broader realm of disruptive technologies. And the first one they highlight might surprise you. It's aerospace and security.
Aerospace and security. That doesn't immediately scream disruptive tech to me. What's the connection there?
Well, think about the world we live in now. There are a lot of geopolitical uncertainties, cyber threats are becoming more and more sophisticated, and the strategic importance of aerospace companies is growing.
Okay, I see where you're going with this, but how does that translate into actual investment opportunities?
Let's break it down. First of all, the demand for airplanes is through the roof right now.
Yeah, it seems like everyone's traveling again.
It's great news for aerospace manufacturers. Their order books are completely full. Then there's private space exploration, which is creating a whole new space economy, literally opening up new frontiers. And we can't forget about cybersecurity. As aerospace companies rely more and more on digital systems, they're prime targets for cyber attacks, so security is paramount.
So it's not just about building rockets and airplanes anymore. It's about securing those systems and the whole ecosystem around them.
Exactly. And that's where the real investment potential lies in companies that are developing those cutting-edge solutions for aerospace security. Think things like advanced encryption technologies and AI-powered threat detection systems.
Okay, that makes sense. Now, the second theme you mentioned is digital infrastructure, which feels a bit more obvious given our dependence on all things digital.
Oh, absolutely. This theme really zeroes in on the growing need for things like data centers, cloud computing, cybersecurity solutions, and even cooling systems as companies spend more and more on digital infrastructure.
I mean, yeah, it's not hard to see why. All those AI applications and data analysis tasks require massive amounts of computing power, and all that power needs to be stored somewhere, managed, and kept secure.
Exactly. The report actually predicts that the data center market is going to double in size by 2030. And get this, cooling systems already make up a whopping 40% of data center costs, and that demand is only going to increase as energy consumption continues to rise.
Wow, that's a huge market. So investing in this theme is basically like investing in the backbone of our increasingly digital world.
That's a great way to put it. It's about finding those essential companies that are powering everything from AI to cloud computing, from data storage to cybersecurity. They're the unsung heroes of the digital age.
Okay, on to theme number 3, intelligent automation and AI. I feel like this is really at the heart of the disruptive tech revolution.
It definitely is. This theme centers around the rapid adoption of AI and automation across almost every industry, driven by the need for efficiency, productivity gains, and, new business opportunities.
I read somewhere that the number of industrial robots in use has nearly tripled in the last 10 years. That says a lot about how quickly automation is changing things.
It really does. And with all the advancements in software and hardware, full factory automation is becoming more and more feasible. That leads to higher efficiency, lower production costs, and even the creation of completely new business models.
It is kind of mind-blowing to think about how much AI is changing the game. How can investors get a piece of that action?
Well, it's all about identifying the companies that are really leading the charge in AI and automation. Think about companies developing those cutting-edge AI algorithms, robotics companies creating the next generation of industrial robots, or software companies building the platforms that allow businesses to automate all their processes.
So it's about understanding which companies are best positioned to capitalize on this massive technological shift.
Got it.
Now, the final theme is next-gen medicines, which sounds both incredibly fascinating and hopeful.
Oh, it is. This theme focuses on all these groundbreaking medical technologies that are truly transforming healthcare as we know it.
And we're talking about technologies that go beyond those traditional pharmaceutical approaches, right? What kind of breakthroughs are we seeing?
We're talking about things like targeted therapies, including stem cell and monoclonal antibody therapies, which can offer much better patient outcomes with fewer side effects. There are also these revolutionary approaches like mRNA cancer vaccines, cell therapies, gene therapies, and personalized medicines. It's amazing.
It really is incredible to think about the potential these next-gen medicines have to address unmet medical needs and just make people's lives better. But from an investment perspective, how do we approach this theme?
Well, it's about finding those companies that are at the forefront of these medical advancements. That could be biotech companies developing groundbreaking new therapies, or big pharmaceutical giants investing in cutting-edge research, or even companies that specialize in manufacturing and distributing these next-generation medicines.
So basically betting on the companies that are pushing the boundaries of medical innovation and really creating the future of healthcare.
Exactly.
Okay, wow. We have covered a lot of ground here, from the butterfly effect to the rise of AI and automation. It's clear that disruptive technologies are reshaping the world at an incredible pace, and the investment opportunities are huge.
They are. And HSBC's report does a great job of providing a roadmap for investors who are trying to understand and capitalize on these transformative trends.
Absolutely. But before we wrap up our deep dive into the future of investing, there's one more crucial trend we need to explore: climate action.
Definitely. We're going to examine how sustainability concerns are driving innovation and creating a whole new wave of investment opportunities, so stay tuned.
Welcome back to the final part of our deep dive into those major investment trends for 2025 and beyond. We've covered Asia's economic rise. We talked about disruptive technologies. Now it's time to tackle a topic that's becoming more and more important for investors these days.
That's right. Climate action. It's not just a trendy buzzword anymore. It's a real driving force behind so much innovation. And like HSBC's report highlights, it's a source of some really interesting investment opportunities.
You're right. It's hard to deny the need for climate action these days.
It really is. I mean, we're seeing the effects of climate change all around us. Those extreme weather events are becoming way more frequent and intense.
Yeah, all those headlines about floods, heat waves, hurricanes, it's hard to ignore. But it's not just about the need for climate action, though, is it?
You're right. There's a growing desire for sustainable solutions, too. Just look at the demand for zero-emission energy sources. Even energy-intensive industries like AI are getting on board.
Yeah, I was just reading about how some of the big AI and cloud computing companies are partnering with nuclear energy providers.
Exactly. They're trying to meet their energy demands in a way that's carbon-free. It really shows that sustainability is becoming a key factor in corporate decision-making. And it's not just driven by consumer demand. There's a real desire to address climate change head-on.
It's great to see that shift happening. Yeah. So HSBC's report focuses on two main investment themes within this whole trend of climate action. The first is energy transition, which seems pretty straightforward.
Yeah, it is. This theme is all about the global shift away from those traditional fossil fuels and toward cleaner, renewable energy sources. So we're talking about solar, wind, biofuels, hydrogen, even nuclear power, and the broader electrification trend.
Okay, I see. And it's not just about the technology itself, right?
No, you're right. It's also about the whole infrastructure that's needed to support this transition. Think power grids, energy storage solutions, and all the investment that goes into building a more sustainable energy ecosystem.
So what's driving this energy transition apart from the environmental reasons?
Well, there's a growing recognition that it's also a smart economic move. Countries and companies are realizing that investing in renewable energy makes them more energy secure, less reliant on those unpredictable fossil fuel markets, and it opens up a lot of new economic opportunities.
So it's not just about being altruistic. It's a strategic decision as well. Now, the second theme HSBC talks about is biodiversity and circular economy, which feels a bit more complex.
It is a little more complex. It's about recognizing that our planet's biodiversity is absolutely crucial for human existence, And the current linear economic model of take, make, waste, it's just not sustainable in the long run.
So it's about moving away from that throwaway mindset and embracing a more circular approach, where we reuse, recycle, and repurpose as much as we can.
Exactly. And it's not just about minimizing waste. It's about really recognizing the value of nature and doing what we can to preserve that biodiversity. The report mentions that something like 50% of global GDP actually depends on natural capital.
Wow, that's huge. So how can investors get involved in this theme?
It's about looking for companies that are developing solutions to reduce biodiversity loss, promote sustainable practices, and adopt those circular business models. Think about companies involved in things like waste management, sustainable agriculture, responsible forestry, and developing those eco-friendly products.
So it's about supporting companies that are not just minimizing their negative impact, but actually actively working to create a more sustainable future.
That's the idea. And as awareness of these issues grows, and as we see new regulations, the investment opportunities within this theme are only going to keep growing.
Well, we've covered a lot of ground in this deep dive. We started with Asia's impressive economic growth and then explored the huge impact of disruptive technologies. And now we've finished by looking at the importance of climate action and sustainability. It's clear that there are a lot of changes happening in the world, and it's a lot for investors to keep track of.
It's definitely a complex landscape, but HSBC's report has given us some great insights into the trends that are shaping the future of investment. And it's exciting to see how these trends are interconnected.
It is. And for investors who are willing to adapt, stay informed, and really embrace these trends, there are a ton of opportunities out there.
Yeah, absolutely. There are definitely challenges, but also huge potential for growth and positive change.
Okay, before we sign off, any final thoughts for our listeners?
Well, the report focused mainly on publicly traded companies. It would be interesting to think about the role of venture capital and private equity in these sectors, too. There might be even bigger opportunities for investors who are willing to explore those less traditional avenues.
That's a great point, and it's something we can all explore further. I think this deep dive has really just been the starting point of a much bigger conversation about the future of investment.
For sure, it's an ever-evolving landscape, and it's important to stay curious and keep learning.
Absolutely. So, to our listeners, keep those minds curious and keep those research engines running. We'll be back soon with another deep dive into a new set of trends and insights. Until then, happy investing, everyone.